Hey guys, welcome to the Max Invest YouTube channel. In today's video, we're going to be having a look at Tesla stock and we're going to be forecasting where Tesla's price could potentially go to. Of course, if you enjoy the video, remember to like and subscribe to the channel, and remember, nothing in this video is financial advice and you should always do your own research. Right now, Tesla stock is sitting at a market capitalization of $621 billion, making it the 10th biggest stock or crypto in the entire world. So Tesla right now is sitting at a very heavy valuation of $644 per share, and it will be interesting to see if Tesla can actually deliver on this valuation over the long term. So there has been quite a bit of bullish news for Tesla. This year, Tesla managed to deliver 201,000 vehicles during Q2. So, this is a pretty massive milestone, and the reason for this is because there was a global chip shortage. This meant there was actually a shortage in the amount of chips that could be delivered, and these are directly needed to make electric vehicles. Of course, this did hurt Tesla's production a little bit, however, despite this, they could still deliver 200,000 vehicles. Last quarter, Tesla delivered 184,000 vehicles, and the chip shortage was going on here as well. So it does show Tesla are doing pretty well despite the global chip shortage. Overall, I do think Tesla are going to be able to deliver 250,000 vehicles the third and the fourth quarter, and they should be able to get up to nearly 1 million vehicles delivered by the end of 2021, which is a huge amount, and this would probably help them deliver on their current valuation. As we can see, last year Tesla delivered around 90,000 vehicles in Q2. Of course, last year Tesla were not subject to a chip shortage, and Tesla were experiencing a massive increase in demand. In 2020, Tesla sold more vehicles than ever, and despite this year Tesla have been able to have over a 100% increase in vehicles delivered. So this is no joke, and it is showing Tesla is doing very, very well despite all of the poor news. A lot of people were very bearish because of the global chip shortage, however Tesla have been able to prove them wrong, and they've still delivered over a 100% year-over-year increase in vehicles, and they are doing very, very well. So, if we take a look at Tesla's chart, we can see that Tesla has one of the more interesting charts. Tesla has spent a very, very long time trading sideways. If we go all the way back to September of 2013, we can see that by the time it was June of 2019, Tesla was essentially trading at the exact same price. This is a period of 2,080 days where Tesla just traded sideways for. Tesla's price did not move up or down in that time, it just traded sideways around these prices. Of course, Tesla stock had been pretty volatile at that time, and you definitely could have traded it for some pretty big gains. However, if you look at the macro picture, Tesla spent a very long time trading sideways. Now, why was this? Well, in 2013, Tesla had a huge rally all the way from 2012 to 2013 of around 700%, from $10 a share all the way up to over $40 per share. However, after this big rally, there was a lot of confusion where Tesla was going to go. Tesla was having a lot of future earnings being priced in at this point. It had a pretty high market cap at $35 a share of around $40 or $50 billion, and a lot of people were pricing in what Tesla could do. However, during 2016, 2017, 2018, 2019, there were not that many subsidies put in for Tesla, and Tesla wasn't doing too well. There weren't too many subsidies, and they were having a lot of big shortages in vehicle production, and over here on this slide, there was some fear that Tesla was actually about to shut down. So you can see they had about 7+ years of sideways trading because it was a high growth company where people essentially had to predict the future. A lot of people thought Tesla was going to shut down, and had a very high short interest on Tesla over this period of time, and its share price stayed relatively stable over this period. However, some people definitely believed in Tesla, and those people have done pretty well. So, what actually led to Tesla's price taking off over the past couple of years? Because as you can see, if we go all the way from the bottom of 2019 to now, Tesla's price has appreciated by 1,857%. This is a huge increase for the price in Tesla, and you'd think something fundamental had to have changed. Tesla was just trading sideways, and suddenly it boomed. Well, with growth stocks where a lot of people like to predict the future, sometimes people all realize the value of this stock all at once. They don't really realize the value over here, and then all the way over here, all of a sudden everyone starts catching on together and they all buy up the stock and realize its value. This can happen with a lot of growth stocks, and it has happened with Tesla. Another big reason for this is because interest rates went to 0% essentially. This means it's a lot easier for companies like Tesla, which are high growth companies, to raise capital, and Tesla have done a lot of capital raising over the past year, which has significantly helped their business. Another big reason is Joe Biden is now the president of the United States, and a lot more subsidies came in for Tesla in 2020. Tesla is an electric vehicle company. It's very costly to produce electric vehicles, so subsidies significantly helps this. Joe Biden has said there'll be no sign of the subsidies slowing down, and these subsidies should help Tesla be one of the biggest companies in the entire world. So, these are just a few of the reasons that has resulted in Tesla's price completely exploding in the last year, and a lot of people really have realized Tesla's value. If we look on a yearly time frame, we can see that Tesla has been more or less holding the bull market support band. The bull market support band is just Tesla's key moving averages, the 20-week SMA and the 21-week EMA. So, if we take a look, Tesla has tested the bull market support band multiple times. It tested it in March and immediately recovered. It tested it all the way over here in July and recovered. It tested it back here in November and recovered. And right now it's testing the bull market support band, and it more or less tends to be staying above it or on top of it. As you can see, Tesla's holding up right now, and it doesn't seem to be breaking down. It looks like in January Tesla became overextended. Tesla was 50% above the bull market support band, and it did look like one of its most overextended time periods. However, of course, this was met with a correction of roughly 40% from high to low, and Tesla has just been trading around the bull market support band, finding its fair value. It's done this plenty of times before, and I wouldn't be too worried right now as it is doing this. Right now, a lot of people are wondering if Tesla can go higher. Can it retest these levels of $1,000? Well, from a technical perspective, it does look like Tesla is better positioned to do this. The bull market support band is higher, it's had some time of cooling off, and it looks like deliveries are going to get better and better, so it should have a good chance to appreciate back to the $1,000 range by the end of this year or by the beginning of next year. I do think around Q2 of 2022 there's going to be a lot more bullish news for electric vehicles, as there shouldn't be a global chip shortage, and Q2 tends to be the quarter that a lot of electric vehicle companies do very, very well in. So I do think Tesla has a good chance of getting back to the $1,000 mark around this time. Now, a lot of you may think Tesla is way too overvalued and it's probably difficult to get back to its old all-time highs. However, you should remember that Tesla is a high-growth company and it's not just a car company. Back in 2010, when Amazon was over a $100 billion valuation, a lot of people thought Amazon was just a book company because all Amazon sold were books. However, Amazon expanded out from being a book company, has gone into selling everything related to e-commerce. In fact, they've even gone into music, movies, and more. They can basically do everything, and this has helped Amazon achieve a $2 trillion valuation and not really look overvalued whatsoever. Tesla has a lot more going for it than just its cars. Of course, its cars are a big revenue. However, Tesla have ride sharing that is going to happen. Tesla also have insurance, whereby on their cars they can actually see every single move you make on the cars, and they can deliver you an insurance plan that is a lot more effective than any other insurance plan. So I do think Tesla insurance is also a multi-billion-dollar industry. Tesla, of course, also have Tesla Energy and Tesla Solar, which doesn't even need to do anything with cars. It can just be normal solar panels installed on your homes, and this Tesla Solar is a huge industry. Solar energy companies are already being valued at above $100 billion, and Tesla is the biggest solar energy company, and it will continue to be so. So I do think if we look at Tesla's fundamentals, it definitely has a good chance of going up a lot higher in valuation in the coming years. You don't have to take my word for it. ARK Invest, which has notoriously been very bullish on Tesla, see Tesla as a base case getting to $3,000 by 2025 per share, $4,000 as a bull case, and $1,500 as a bear case. Now, in my personal opinion, I think it's going to be more like the bear case, and I do think they're a bit overly bullish. They say Tesla is probably going to hit 5 million vehicles delivered by 2025 or 10 million vehicles by 2025. I personally think it'll probably be a bit under 5 million vehicles, and I really can't see this being hit. Also, 43% is Tesla's bear case margin, and 50% is the bull case margin in ARK Invest's opinion. Elon Musk himself said 30+% margin, 30 to 40% would be amazing for Tesla, and I'm more thinking it's probably going to be between 30 and 40% as their margin on vehicles. However, ARK Invest do have obviously a significant amount of experience, and they have been right a lot in the past. And one interesting thing that I see with a lot of electric vehicle companies is every single year their margins are growing by orders of magnitude, so this is potential to be hit. Overall, I do think ARK Invest are being a little bit bullish here. However, I still definitely do see Tesla going higher, and being one of the largest companies in the world right now, I definitely think it's possible that Tesla are going to be able to hit the $1,000 range by the end of the year. However, only time will tell. As we can see, of course, Tesla's volume have died off, and they're just hanging around at this range with not that much hype. So to see that Tesla hasn't bled that much, even though the hype has died down significantly, and they're trading very comfortably in the $600 range, is definitely very good, and I do think Tesla has another way to go and another leg upwards. Of course, if you enjoyed the video, remember to like and subscribe to the channel and comment down below anything you want to say about Tesla. Thanks for watching the video.